What are robo-advisors? How do robo-advisors work?
Are robo-advisors worth it?
Welcome back, fellow investors, to our channel where we explore the latest trends in finance and technology. Today, we're diving into the world of robo-advisors, the innovative platforms revolutionizing how we manage our investments. From their inception to their current prominence, we'll unpack how robo-advisors work, compare different platforms, and share expert tips for automating your investment strategy using these services. What are robo-advisors? Robo-advisors are digital platforms that provide automated, algorithm-driven financial planning services. They leverage complex algorithms and advanced mathematical models to offer personalized investment advice and manage portfolios for individuals. Essentially, they combine the power of technology with financial expertise to make investing more accessible and efficient for everyone. How do robo-advisors work? To get started, users typically complete a questionnaire that assesses their financial goals, risk tolerance, and investment preferences. This information helps the robo-advisor algorithm tailor an investment strategy specific to each user's needs. Portfolio construction based on the user's profile and objectives. The robo-advisor algorithm constructs a diversified portfolio using a mix of asset classes such as stocks, bonds, and ETFs. This portfolio is designed to optimize returns while minimizing risk according to modern portfolio theory principles. Automatic rebalancing. Robo-advisors continuously monitor and rebalance portfolios as needed to maintain the desired asset allocation. This ensures that the investment strategy stays aligned with the user's goals and risk tolerance, even as market conditions fluctuate. Cost-effective investing. Compared to traditional financial advisors, robo-advisors typically charge lower fees since they automate much of the investment process. This cost-effectiveness makes them attractive options for investors looking to maximize returns while minimizing expenses. Comparing robo-advisor platforms. Wealthfront, known for its tax-efficient investing strategies, Wealthfront offers a diverse range of investment options and features automatic tax loss harvesting to minimize tax liabilities for investors. Betterment, with its user-friendly interface and goal-based investing approach, Betterment is popular among novice investors. It offers features like automatic rebalancing and tax-coordinated portfolios to optimize returns. Vanguard Personal Advisor Services, backed by the reputable Vanguard brand. This robo-advisor combines algorithmic investing with access to human financial advisors for personalized guidance, making it ideal for investors seeking a hybrid approach. Schwab Intelligent Portfolios, offering a wide range of investment choices and no advisory fees. Schwab's robo-advisor is appealing to cost-conscious investors. It also provides access to human advisors for additional support. SoFi Invest Automated Investing, known for its low fees and social investing features, SoFi's robo-advisor offers a seamless user experience and customizable portfolios tailored to individual preferences. Tips for automating your investment strategy. Define your goals. Before diving in, clearly define your investment goals, whether it's retirement planning, wealth accumulation, or saving for a specific milestone. This will guide your choice of robo-advisor and investment strategy. Understand your risk tolerance. Assess your risk tolerance accurately to ensure that the portfolio constructed by the robo-advisor aligns with your comfort level. Remember, higher potential returns often come with increased volatility. Regularly review and rebalance. While robo-advisors automate much of the investment process, it's still crucial to periodically review your portfolio's performance and adjust your strategy as needed. This ensures that your investments remain aligned with your goals and market conditions. Take advantage of additional features. Explore the additional features offered by robo-advisor platforms, such as automatic tax loss harvesting, dividend reinvestment, and goal tracking tools. These features can enhance the effectiveness of your investment strategy and optimize returns. Stay informed. Despite the automation provided by robo-advisors, it's essential to stay informed about market trends and economic developments. While you don't need to micromanage your investments, having a basic understanding of financial markets will help you make informed decisions. Diversify your investments. Avoid putting all your eggs in one basket by diversifying your investment portfolio across different asset classes and geographic regions. Robo-advisors can help you achieve diversification through their algorithmically constructed portfolios.
Are robo-advisors worth it? Ultimately, whether robo-advisors are worth it depends on individual preferences, investment objectives, and comfort level with technology. It's essential to carefully evaluate the features, fees, and services of robo-advisors compared to traditional advisors to determine which option best aligns with your financial needs and goals. Consulting with a financial professional can also provide valuable insights and guidance in making this decision.
Conclusion. As we conclude our exploration of robo-advisors, it's clear that these innovative platforms are reshaping the landscape of investing. With their sophisticated algorithms, personalized advice, and cost-effective solutions, robo-advisors offer a compelling alternative to traditional financial advisory services. By harnessing the power of technology, investors can automate their investment strategies, optimize returns, and work towards their financial goals with confidence. So, whether you're a seasoned investor or just starting out, consider incorporating robo-advisors into your financial toolkit and embrace the future of investing. Thank you for joining us today, and remember to subscribe, like and comment down your thoughts on robo-advisors. Until next time, happy investing!